All right, in today's Money Watch, everyone from Main Street to Wall Street is wondering whether the Federal Reserve will cut interest rates today for the first time this year. CBS News business analyst Dollar Jill Schlesinger is here to break it all down. So let's get right into it. Why is the Fed expected to cut interest rates this time around? And what does that mean for consumers? Because their sentiment is at a 4-month low. And also, holiday spending coming up.
Yeah, there's a lot going on. So the Fed's got two main jobs: try to focus on the labor market and also prices, inflation. The labor market is deteriorating, and there's no doubt about that. But at the same time, we see prices are starting to edge higher because of those tariffs. I think the Fed is really going to focus on the labor market. We're expecting a 1/4 percentage point drop today. Now, listen. When you are a borrower, a 1/4 percentage point does not sound like a lot. Credit card rates, they're still over 21%. Auto loans are coming at 7.5%. Mortgage rates, even though the Fed does not control them, they have been drifting lower, though, in anticipation of all rates going down. So that's probably good news. So if you're a borrower, you get a little bit of help. If you're a saver, you're not going to earn as much interest on those savings accounts. Try to go online to find those 3.5%, 4% deals.
Of course.
But as you're absolutely right that as we are 99 days away from Christmas Day, shocking, I think people are getting a little spooked. They say that they're not going to spend as much. We think that the spending level this Christmas down by about 5%. But when you look at consumers and what they're feeling and how they think they're going to spend, again, feelings don't equate actions. But when you look at that holiday spend, people say, I'm worried that prices are going to be higher. I don't know if I'm going to spend as much. And I think this makes sense. If you're operating in this economy, this is what you're confronted with. You must be aware that prices could be rising.
Yes, no, maybe so. Stocks are back up. Will they continue?
Gosh, who knows? But just be careful. If you haven't rebalanced in a while, make sure you don't have too much money in one thing.
Appreciate you. Thank you so much, Jill Schlesinger.